House to Home, presented by Remax Diamond Realty.
Half a day, everybody. Is it Tuesday already? Which means we are talking about real estate, and I am, of course, Jason Salas. Liz is over there, Gina's in the other corner, and we have a very, very good friend of ours, Dominic Cruz, over at Coast 360. Greatest shirts, greatest polo shirts on island. I kid you not. They have the best, and we got Dom on a great day because Dom, you have the very nice green ones today. I know you guys like 8 or 9 colors and everything, but I
Oh,
always like green.
yes, we do.
Yeah, we
I
and we
guess
got the JFK colors today.
yes, we do.
Biba Islanders. You know,
Viva.
a Biba credit score, because that's what we're talking about today, and that was a terrible segue. But we are talking about your credit score, and more importantly, Dominic is, of course, an expert on finance. And Dom, we are very, very happy to have you here because we would like to know about the different things that you may do, both pro and con, that could affect your credit score and ultimately either positively or negatively affect your ability to get the house of your dreams.
Mm. Yes, credit scores do play a big part in mortgage financing. One of the things that we do look at is again your score, the amount of bills you pay, really could affect the outcome of your loan. Um, in terms of maybe bettering your score before you apply is one thing that you may take a look at before you try to apply for the house is maybe get pre-qualified.
Yeah.
The pre-qualification stage, right, would give the lender a chance to see what your finances are. And some people do have credit monitoring that may give them an indication of what their credit score is at that point in time.
Mhm. Okay, now obviously there's like little dings, and
Jason?
I mean, when we're young, you may, my own example, right, not make the greatest financial decisions in the world and everything. I may have bounced a check or two when I was 19 years old because I had to have that one shirt, from Primo Surf when I was at UOG, right? And I didn't have enough in my bank account, but obviously that does not bode well on your credit score. But how much impact does that have? And then what does it take to restore it to a favorable point?
If for like bounce checks, I believe if it hits a collection status, that's when it actually would affect your credit score. But if you do bounce a check, I would advise to try to clear it as soon as possible and not let it hit your a collection status,
Hmm.
because then it could take time to what do you call that repair it. I would think that having collections, it will also depend on the lender on the type of what do you call that collection it is, because if it's like medical, most lenders would not take that as a derogatory item, so it just depends.
Okay, now what about some of the other things that, like that people go through in life? Is, like if you've been accused of a misdemeanor, like if you have a traffic violation, if you are accused of a felony, if you are brought to trial and everything like that, do those have any bearing on your credit score? Those are more about
Um,
character. I get it, but
Jason, you're bringing up all the do not do the following things.
yes.
Uh, Everything you just mentioned are on the do not do list if you're serious about buying a home. All of those things. And I kind of want to say I want people to focus on what they should be doing.
That's a very good
Because
point. So go ahead, Gina.
if you're serious about buying a home, all of the stuff we just mentioned, if they're on your list of things you're currently doing, you're not serious about buying a home.
yeah.
Right. The other thing that I think people don't understand, and I'm going to share just when I first got into the home market, my problem was I wasn't making enough money to have a credit score because I couldn't get anybody to give me credit. I couldn't get a credit card. I couldn't get a loan. So I had no credit. And so when I first applied to buy a home, I actually couldn't get a mortgage loan because I had no credit. And then I went from having no credit to having bad credit, which is exactly what we just talked about. And you have to recover from that. And the lenders have like a timeline on how long they want to see you in the recovery stage before they'll give you a mortgage.
Okay, real
But
quick,
those
Dominic,
are all
from a
like
bank's
calculated.
from a bank's perspective, which of those conditions is worse? If you have no credit at all to speak of, or if you have credit but it is bad?
It could, I mean, both of them are not good cases because having no credit score, some lenders won't be able to give you a mortgage loan. And depending how bad your credit could also be give you the same result.
Okay, so now let's bring in Liz, who will be our redeeming angel of your credit score, right? So Liz, like you know this market so well and everything. What are some of the things that people do to actually have a stellar, exemplary credit score?
Well, number one, you have to be paying, as Gina put it, she didn't have a credit score. And one way to do it is to get a credit card or get a loan. And the key is to make your payments on time and keep making those payments, because the moment you are late in a payment, it is reflected somewhere where a scoreboard that shows this person did not make their Macy's credit card payment on time and they were late 2 or 3 times. Those affect your credit score. So in any credit that you've taken, whether it be Macy's or Penny's or Sears or the bank, those payments have to be made on time. Now,
What about student loans?
Well, even that, because if you're paying back a loan, it'll show, have you been paying on time? Because that's a ding against your credit. They will count that and your credit score drops. Now, going to the credit score, Dominic mentioned that they do interview and they do pre-qualify. Any individual can go online and there's free credit scores that they could check on, because I think, Dominic, if I'm correct, when you do your initial processing for a loan, you don't pull the credit score at that time. You do it later when you finalize the loan, correct?
That's correct. When the applicant applies for the loan is when we actually pull the credit.
So an individual before in that process can go online, but be careful. When you check your credit score, make sure you don't click any membership or because then they'll charge you and send your credit score periodically. So they monitor it. So if you want the free, make sure you're clicking on free. There's Credit Karma, there's different sites where you can check your credit score. And then Dominique can talk about what credit score is acceptable, what is below the standard in terms of getting the loan. But again, going back to pay your bills on time. Otherwise, you won't be able to get a loan.
That's correct.
Yeah, so go ahead, Dom. Like I don't think enough people like in our community and in our island family really have a vested interest in how much their credit score really means to them. This should be like right up there with, what your blood pressure is, right? And maybe if your credit score is not good, then your blood pressure is going to have a much different score.
It could. I mean, different programs have different requirements. So like, for example, the USDA loan, it does require a 640 score. In some conventional loans, the better your score, the less closing costs you may pay. So some lenders may even have an advantage if your credit score is pretty good. It may also help you get a better rate.
That's interesting. So it's not just a requirement; it's also an incentive.
Yes, correct.
So
again, it does help to have that. Yes.
So Dom, what do you consider there are different types of mortgages, and you just mentioned that rural development is at 640.
Mm-hmm.
So what are the different types of loans and how does that affect the score? I mean, what are the variables in credit score that are allowed? Like if rural development is saying you could be at 640, is that the minimum, or is that, is that you cannot be lower than 640, but it could obviously be higher? And what's considered a really good credit score, and what does VA require?
For a good credit score, I think anything above, I think it's 660 to 800s. That's considered good. There's some programs that I know that may not require a score, and I think VA might be one of them. So most lenders finance through, I want to say, Freddie Mac or Fannie Mae, and so they do have a automated underwriting system that we run these loans through, and we get a type of like a feedback or like an approval or accept feedback, right? And so that helps us determine whether to give the loan or not. But it's a tool that we use, and so they also have credit score criteria that may determine the outcome of that as well.
Okay.
So there are five, what is it, 5 C's for your credit in determining your credit? Because your collateral is one of the factors, right? They want to know your credit history, your debt to income. You want to go over that, Tom?
Hold on one second.
So the 5 C's of credit stability, right?
Yes. Your credit history is a factor, your debt to income, amount of money, your capital, how much you have, your collateral, because if you're getting a loan, they want to know how are you going to pay it back? Is your income sufficient for that? And if not, can they attach a lien on a piece of property against that particular loan? So some banks, and Dom can elaborate on that, some banks will require a collateral depending on the loan type and what assets you have, of course, and what's the purpose of the loan and the terms.
I'm sorry, and then Dom, credit score is purely and exclusively like an individual rating, right? Like this has no bearing on like if you're a married couple, if you're in like a civil union or anything like that, right?
Yeah, that's correct. Every individual has a credit score, or should have a credit score when they're applying, because there's some times when members or consumers do apply, and if that credit score is not there, we won't be able to make a determination on the decision. However, there's some programs that may let you do. It's called I forgot the name of it, but where we would be able to take non-traditional credit, which is like payments on your utilities, payments on insurance. Some lenders may be able to give you or lend you credit based on that type of information.
So Dom, a question. So if I had a great credit score, but my husband had a low credit score and we're coming in for a loan, how do you handle that?
So we usually take the lower up. I mean, the middle score, the lower of the middle is what we usually take. So most banks take the lower because of the risk factor. And so most of your fees are based on that score.
I would just say, and I don't work at a bank, I would just say just use the wife's credit score, because the wives always have the better credit score.
Is that an option though, to remove if you're a married couple filing your taxes together and one of you has bad credit? Could I come in and say, well, I'm going to apply for the loan, but I want to remove my husband because he has bad credit? Will the bank allow it?
Yeah. I mean, we can't discourage anyone from applying or not applying. No, anyone can apply for the loan, but if you feel that it may benefit your situation in doing that, and if the person can afford it, then yeah, I would suggest it. And again, it could be cheaper.
So if the wife's income is sufficient to carry the loan, so here's a question: as you interview husband and wife, do you, as a loan officer, come up with suggestions to benefit the couple by recommending, well, your score is less, but if you do the loan this way, you'd be the ability to get the loan is more, as possibilities are higher.
Yes. You
That's
can. I
part
mean,
of
if
that
it,
would
if
be part
it,
of your loan counseling process.
correct, yeah. I mean, if it looks like it will benefit them, again, we want to make sure that they're, what do you call that? Good homeowners, right? Or good pairs for their homes. And yeah, so we want to put them in the best situation possible. So we don't want to, again, give them the best chance possible. Because again, it's everyone's dream to own a home someday.
Sure. And Dom, if I do have like say like a little bit of a sketchy history with my credit score and my evidence in the past cannot come back to haunt me, right? Like every time you check my credit score, you're checking it at that moment, right? So if 25 years ago my credit score was not so great, but today it's exemplary and everything, you don't do you take my past history into account?
Good question.
Um, whatever your
Please say
score
no.
is today, whatever your score is today, we'll take it. But again, I think the credit reports do not, they hold a certain amount of information that's prior. I think it's like 7 years back, so again, sometimes they filter it. Your credit report gets filtered,
It's
but
quite
again,
literally the statute of limitations.
but
7 years.
again, I mean, the scores are not based off, it's what it is today.
Okay.
Yeah, so.
So Dom, the question is, so let's say we put in an application. I've got a credit score of 760, for example, and in my credit report, it shows that 7 years ago, I missed a few payments, or I was foreclosed on, or I defaulted. That would you would look at that and factor that into whether you would give me a loan?
Um, yes, we would. And again, I think the decision for that, because of what maybe the last 24 months of your history has been outstanding, or you haven't missed any payments, and maybe the situation has changed. The foreclosure may have some life-changing issue that may have brought that up, and there could be some type of situation that happened, and you can maybe explain that to the bank or to your lender, and if it did happen that way and that's what made the foreclosure happen or brought down the score, but as of now I'm in a better place, I may afford my bills, yeah, we may, the lenders may grant the loan.
So another question. So you as a loan officer will review this. You go through the credit score. What is the hierarchy? It goes from you to whom, to whom, to whom for the loan to be approved.
So some lenders had different stages, and again, it could go from a loan officer to an approving officer, or there'll be like another signer that's right after that. But again, it just depends on the lender's what do you call it, approval requirements, right? Or so again, maybe not all lenders have it, but again, it's just depending on the lending authority that the lender may have or the authorized signer. So again, yeah.
So for Coast 360, what is your hierarchy?
So it goes from MLO to mortgage manager, then our chief lending officer, and then our CEO. That's how.
But you know what I recognize about Coast is it's all locally done.
Correct.
Everything.
So
Yeah.
it's all done in-house, it's all done on Guam, it's all done on Guam time. So I find that to be an easier process. I mean, not that, waiting for a lender who's based off Guam is a difficult process, but I just find that, when my customers have an issue, they have a tendency to say, well, I'm going to go in there and talk to somebody because there is somebody they could go in there and talk to. So,
I think that's the advantage, right? Is that you get to
Yeah.
speak to someone live. And I think that when you decide to go with a local bank, I think the local banks know more the culture, right? The market, right? And it's easier for you to explain your situation. Yeah.
Yeah.
Now, Don, that's a really good point to make because knowing the local culture out here, does the average Guam resident what is the difference in our average credit score compared to like, like our friends in the States. Because, I mean, we're very, very disciplined people out here. Our economy maybe isn't what it is in the States, but I mean, like we like to have a handle on things here in the islands.
Man, it's hard to say. I can't put a number on that. I
Okay.
mean, as far as for data concerns, but yeah, I think every file that comes in, man, it's a different story. So, there's, I mean, people have different types of what do you call it, employments. You have some business owners, right? So it's hard to put a number on that.
Okay. Well, and all that stuff I said at the beginning of the episode where I said like I bounced a check for that one shirt. Yeah, I was totally just making that up. Yeah, that's side story.
No, but yeah, I mean, people, I mean, it does happen, right? So again, before you do buy a home, that's one thing you should do is take a look at your credit. See if there's any blemishes, see if there's anything that you can improve, right? Just to set yourself up that you give yourself the best chance to get approved. So yeah, I will leave it at that.
So, Dom, usually when someone has a little blemish, let's say my credit score has a blip where I forgot to do a credit card payment because I was traveling and I have one mark here and maybe another mark there. When you look at a credit score in that respect, and I explain, well, I was traveling and I forgot to make that payment, would you
I
as a
wouldn't take that.
would you as a loan officer consider that, look at that and say, how would you look at that?
Again, so your credit score, if the late payment does not affect it that much, right? Again, it could be a reason why that person missed the payment. And if it's a one time or, I mean, out of, let's say there's a section on your credit report that counts the number of times you made payment. And let's say you paid it like, let's say 60 months and you only been one time late, that's not too bad. I mean, no one's perfect, right? So again, there's going to be situations where you may not be able to pay something. And so, I just got to explain it to the bank. And if your situation is valid or your explanation is valid, and then they just might grant you the loan. Yeah.
I tell people all that the time, Dom. I mean, banks are not, our evil overlords or, this very, very, like a force that just basically like, no, 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 no. I mean, you essentially are friends and you're going to go to any extent to actually make this happen.
We try our utmost, whatever we can do to try to make it work. I mean, if it can't make it work, then we'll try to explain why we can't and then how to help the person get there.
But we're actually making your job a lot harder if our credit score is not so good. So, like you said, everybody will like watching this. Dom had the greatest advice and everything. Just get your credit house in order. You're good to go.
I mean, again, it's one portion of the actual equation that and it plays a big factor. I mean, it does help the lender make that determination a lot easier if you had, I don't want to say excellent credit, but at least good credit, or satisfactory credit for that matter.
So here's another question, Dom. So I'm buying a house and nobody said anything about not buying furniture. And I bought a car on top of that. And you've already checked my credit score. I'm very good. You've approved the loan. Do you check the credit score again prior to closing the loan? Because I've already bought furniture, I bought a car. How does that affect my purchase?
If you were to buy, let's say these big ticket items during the process, it could affect you down the road, right? Again, when we pull your credit score, we hope that our loan officers would let you know that try not to obtain any more loans or any new credit lines during this process. Again, it's because we want to make sure that you can pay your loan back. And if you bought that car after the fact, it could, there could be a situation where you may not be able to afford both. And we hope you don't get into that situation.
Yeah, because they're counting the amount of bills you have
Yes.
against your income. So if you increase the amount of bills, debt during that process, it's going to definitely affect the amount they're going to give you. And if you already picked a house at this amount based on your qualification, and then you go buy a car, the amount you qualified for is definitely going to go down.
Yeah.
But I want to point out that one of the reasons I like working with Dominic is because he'll sit with the customer and this is what I'm promoting. If you're out there getting pre-qualified for a home loan, you got to look for loan officers that have this characteristic. They will make the effort and the time to sit with you, look at your income, look at your bills, look at your work history, and strategize with you and tell you if you need to do anything to put you into the right category so you can now afford or move forward with the home you like. Because this is a big decision in your life, and it takes a lot of planning because it's a big debt. You're going to be paying it for 30 years, and you should really plan and put everything in the right order. And Dominic, and I know there are other loan officers out there who do the same, but I know for a fact that Dominic will sit with you, he'll strategize with you, and there are some things he can't tell you. So, folks, there's things he's not going to be able to offer you advice on. You come to us and we'll do the rest. But Dominic will tell you, this is, for this loan, this is what you need to do. You're going to have to get rid of this bill, and then you're good to go. Or you're going to have to do this and that, and then you're good to go. You need 6 more months in your employment history, and then you're good to go. But the point of it is he'll strategize with you and get you on that track. And then you go to your realtor, and the realtor will put you on the track to the right home. And it's a partnership.
And please, boys and girls, please make sure to go see Dom and his colleagues over there at Coast 360 in person, because first of all, they have an absolutely gorgeous building that is amazing to be inside. And two, I know I was saying at the beginning, those shirts really do look good in person. Those shirts are amazing.
House to Home, presented by RE/MAX Diamond Realty.